And when you hear the sound, it means it's time to get an update from the world of business. You're welcome to Business Incorporated. Here's what we have for you on the program today. Well, the world celebrates World Decent Work Day. Nigeria joins in, and we'll look at the 4 pillars of decent work in Nigeria. And then in Egypt, it's not so good news as the bonds plunge after Moody's Investors Service downgrade. And President Ruto of Kenya is set to borrow $1 billion from China, another borrowing. Details of those stories and a whole lot more is what you get in the next 25 minutes. You're welcome. I'm Ini John Mekwa, but let's start with what's going on in the market. At intraday, we see equities in Africa. The NGX keeps up that bullish sentiment that it gained yesterday at the close of trade. Looking at the numbers there, we see it's marginally up 0.02%. South Africa looks better, 0.21%. Also at intraday, Egypt is closed for today, but closed in the positive 0.84%. Kenya is also from yesterday about closed negative 0.35%. We move over to the Middle East now to see how those numbers are doing. And right in the Middle East, it's just the UAE markets that are trading today. The other two are not. Abu Dhabi is positive 0.36%, and so is Dubai, 0.16%. Saudi Arabia and Qatar are closed, but we see that Saudi Arabia closed negative 0.70%, as well as Qatar 1.23% in the red at the close of trade. Let's head to Berlin now, where our correspondent, DW Channel's correspondent, Jiponda, is standing by and tells us that EU leaders have an informal meeting in Spain where they are set to discuss security and the bloc's economic policy. Chip, fill us in on this. What are they saying? What's likely to come out of this meeting?
Thanks for having me, Inni. Well, this informal meeting today comes after Thursday's summit of European leaders. Now, that was attended by all European states except for Russia and Belarus. So this was the alliance formed following Russia's invasion of Ukraine in February last year. The goal of the summit is to bring European leaders together and enable an exchange between leaders who wouldn't ordinarily meet. Today, it is the leaders of the EU's 27 member states that are meeting, and they have a mountain of problems. Ukraine will be at the top of the agenda. The EU leaders will be discussing whether the country can join the bloc. Migration is another major issue. The numbers of migrants arriving in the EU have been rising, and there's been rows in the bloc about how to equally share the burden of taking in new arrivals. Here in Germany, many local authorities have been struggling to cope with a high number of asylum seekers and refugees, and it has become a major political issue. In fact, one recent poll shows that Germans are more afraid of migration than they are of climate change. The EU leaders will also discuss how the bloc can become more competitive and be innovative while reducing reliance on non-EU countries, in particular China.
And I wonder how these decisions will affect the economic policies on the bloc.
Well, Inni, we know that the president of the European Council, Charles Michel, told EU leaders that this summit would be a time to define a strategy to ensure the bloc's resilience and competitiveness in a challenging geopolitical environment. So this meeting will help steer the discussion on potential export restrictions for technologies, especially those that can be used for military purposes. This is part of the economic security strategy that the EU Commission released in June. And discussions will also focus on the extent to which countries are willing to have similar policies on national security, and also the extent to which they are willing to transfer some of the powers to Brussels. But any transfer of power on decision-making to Brussels may be difficult in some countries where Eurosceptic parties are enjoying growing support. And there we are talking even about countries like Germany and France, which of course are the bloc's biggest economies. Here in Germany, for instance, the far-right AfD has been gaining support in recent months. Another point that may, of course, prove difficult to agree on is the extent to which European markets should remain open to foreign companies. Countries such as Sweden and the Netherlands want more open markets, while others, like France, protect domestic producers. So that's also likely to be a point of contention. Now, because this is an informal summit where no results are expected or major decisions are expected, EU officials will be trying to get a better sense of where the potential differences are so that they can find ways of addressing them in their proposals going forward.
All right, let's turn to the markets now. Chip, are you there?
Ini, are expected to see modest gains today. Investors continue to be concerned over interest rates, and preliminary U.S. labor market data has done little to ease their worries. There's also not too much to look out for today apart from that in terms of data here in Europe. But next week, we do have Germany's inflation data coming in midweek. And of course, we'll be also watching proceedings of the Wirecard trial. That is the biggest fraud trial in Germany's corporate history. Also, BMW, Germany's luxury car maker, is set to release its China strategy. So that is something that will be watched very closely here, given some of the things I mentioned regarding national security here in Europe and economic security in particular. So of course we want to see how the private sector is responding to some of the EU's plans.
All right, Chiponda, thank you so much and have a great weekend. All right, now let's move on to the United States, where stock futures rose slightly early on Friday as traders await Friday's jobs report. I can tell you for free, it's moving a lot of market. Looking at the numbers right there, it's green mostly. 33,404 for the Dow Jones at 0.30%. 4,304.50 for the S&P. Also are in that range, 0.31%. NASDAQ is also within that range, in the green, 0.38% at 14,918.75. The jobs data is pushing a lot of markets, is a major factor now. But let's go to Thursday and find out from Maria Bird how the market closed on Thursday in the United States.
The U.S. stock market dipped on Thursday as the Dow Jones was down at 0.03%. The S&P 500 down at 0.13%, and the heavy tech NASDAQ down at 0.12%. Many investors are bracing for Friday's jobs report, which are expected to show 2,000 increase in jobless claims. This was expected, but many investors are concerned that this will mean that interest rates will continue to be high. This will mean that the stock market will continue to suffer over the next days and weeks ahead. Investors are watching to see how Friday ends up and what this means for the U.S. economy.
Certainly not just the U.S. that is watching out for it. Going to Asia Pacific now, stocks were mixed. As investors look ahead to that U.S. jobs data that could set the tone for the Federal Reserve's next move for interest rates. The index was last trading 2.1% higher. Looking at Nikkei, the Nikkei 225 is in the red, 0.26%. Kospi is, however, on the flip side, 0.21%, 2,408.73. The Hang Seng Index, looking very good and comfortable there, 1.58% in the green. If we can see, Shanghai is also in the red, 0.10%, and ASX 200 of Australia is almost 0.5%. China's markets are still closed. That's why you have that Nikkei 225 in the red, being like that because of a week-long holiday. Hopefully, they'll be open on Monday and we'll have fresh numbers. Global oil prices were stable on Friday, but on course for a week-on-week loss as demand fears driven by macroeconomic headwinds were compounded by another partial lifting of Russia's fuel export ban today, Friday. Brent futures were down just 5 cents, that's 0.1%, at $84.02, while U.S. West Texas Intermediate crude were down 6 cents at $82.25. Russia announced that it had lifted ban on diesel exports for supplies delivered to ports by pipeline, under the proviso that companies sell at least 50% of their diesel production to domestic market. Almost three-quarters of Russia's 35 million tons of diesel exports were delivered via pipeline in 2022. The ban on all gasoline exports remains in place, however. Brent and WTI futures were on course for approximately 12% and 9% week-on-week declines, respectively. On Friday, driven principally by concerns that higher for longer interest rates will slow global growth and hammer fuel demand. Metals market now. Gold steadied near 7-month lows on Friday as the United States dollar and bond yields, which scaled fresh highs this week, took a breather, and investors awaited U.S. non-farm payrolls data that could affect the interest rate outlook. Spot gold was flat at $1,819.60 per ounce and was on track to log a second consecutive weekly loss, shedding 1.6% so far. U.S. gold futures firmed 0.1% at $1,834. Benchmark U.S. 10-year bond yields pulled back from a 16-year peak, and the U.S. dollar was off November 2022 highs, but remained on track for 12 straight weeks of gains. Federal Reserve officials indicate that little concern that the recent rise in the U.S. Treasury yields could impair soft landing for the economy, and said it could actually help the central bank fight inflation. SPDR Gold Trust, the world's largest gold-backed exchange-traded fund, says that it's holding its lowest levels since August 2019 on Thursday. Well, let's leave the markets now and look at the workers. October 7th, that's tomorrow, is the World Day of Decent Work celebration. This year, the theme is Change the Rules. That's for global. Nigeria has decided to make it home and say our voice, our strength. And we earlier this morning spoke to the representative of International Labour Organization in Nigeria on the 4 pillars of decent work agenda and how that's being implemented in Nigeria.
If you look at the area of rights at work, which really covers issues around fundamental principles and rights at work, and the work that we have been doing collaboratively with the government through the Ministry of Labour and Employment, and of course with our social partners, the NLC, TUC and NECA, we have really achieved some good progress in the area of child labour, for an example. You also look at issues around labour migration, the revision of the labour migration policy for Nigeria. It's a very important step because we are now strengthening the labor migration governance so that there is clarity in terms of the movement of persons for opportunities in and outside of Nigeria. When you look at the second pillar, for example, on jobs and enterprises, the work that we have been doing with NECA, the support that we have been providing, especially in the area of women economic empowerment, the support that we are giving to women entrepreneurs in order to access markets, access opportunities, access finance, and the different interventions that we have been implementing. The role of the National Labour Advisory Council in Nigeria has played an instrumental function in terms of facilitating dialogue, creating space for the tripartite partners to have a conversation on issues that are impacting Nigeria from the socio-economic perspective, but most importantly, to co-create solutions that are impactful, relevant, and applicable to the context of the country.
Well, we do have more on that, but that'll be on the other side of Business Incorporated. Just stay with us. Welcome back to watching Business Incorporated here on Channels Television. We're still in line with that workers' celebration. The Nigeria Employers Consultative Association, that's NECA, and the National Pension Commission, PENCOM, are discussing employees' welfare reforms and implementation of schemes that will ensure that workers are well catered for even after their active years. Well, this comes to the fore as the world celebrates World Decent Work Day tomorrow, October the 7th. Both parties believe that certainty in the welfare of employees is a way to create a decent workplace. Employers under the aegis of Nigeria Employers Consultative Association, NECA, are discussing employees' welfare with National Pension Commission, PENCOM. The collaboration between the employers in the private sector and PENCOM promises reforms and implementation of schemes that will ensure that workers are well catered for even after their active years. But the employees also have their role, which is to avail themselves of their rights and available packages in the pension scheme.
Collecting transport. That means you have official car and the company is foiling it. Then for your own 8% contribution, it can be basic housing, then any other allowance that is available, it can still be picked as part of the 8%, subject to the internal processes, if I'm correct, of the company. Yeah. So it's not limited. The minimum is basic transport and housing. It can go beyond, it can be gross. You know, the 8% can be on gross, is also allowed. We also advise sometimes that just ask the PFAs to give you the benefits. You know, don't go further into the conversation about which one is best.
While it's predominantly employees in the private sector that's captured in the conversations, some state governors seem to have slowed implementation of the contributory pension scheme for the organized private sector.
The state governments are supposed to be part of the contributory pension scheme, but you find that most states are not participating. And that is what is giving the pension industry bad name, because the Nigerian public or the public don't know the difference between pensioners of the federal government or the pension from the state government. The way forward, now, the employers, we admonish them to try as much as possible to remit whatever they have deducted from the employees. And employees on their own part, upon retirement, they should try to enroll so that their pension can be paid immediately.
The pension industry has been progressive, with the size of pension assets approaching 17 trillion naira for the second quarter of the year. Consequently, interactions such as this become more imperative for the impactful application of its growing assets. Well, away from employees, at least for now, ahead of the upcoming fall meetings of the International Monetary Fund and the World Bank, which begins on Monday in Morocco, the managing director of the IMF, Kristalina Georgieva, says that the global economy has shown remarkable resilience, but still bears deep scars from the coronavirus pandemic, the war in Ukraine, and rising interest rates. While delivering her curtain raiser speech in Abidjan, capital of Côte d'Ivoire, the IMF chief mentioned that global economic growth is likely to remain well below the 3.8% average of the past 2 decades, while the world has lost $3.7 trillion in economic output from successive shocks since 2020. She also emphasized the place and the role of African economies in global economic growth.
A prosperous world in the 21st century requires a prosperous Africa. Advanced economies are rapidly aging, but they have abundant capital. The key will be to better connect this capital to Africa's abundant human resources, to inject more dynamism into the current anemic global growth outlook. Africa also makes the strongest case for building economic resilience. The COVID-19 pandemic, Russia's war in Ukraine, climate disasters, the cost of living crisis, political instability, these are the many faces of a shock-prone world. Their impact is most fully on display in Africa, as is the overwhelming necessity to better prepare ourselves for that more shock-prone world. And a prosperous Africa requires maintaining the most important bridge of all, the bridge that connects all countries, the bridge of international cooperation. As people in Abidjan would say, On est ensemble. We are together.
Of course, more of that from Monday when the meeting begins in Morocco. Now let's move to Egypt. Not so good news as Egyptian dollar bonds plunged after Moody's Investors Service downgraded the country's ratings to one of the lowest rungs of speculative grade, and the International Monetary Fund's chief urged another devaluation. The bonds were among the biggest losers across emerging economies on Friday, falling even deeper into distressed territory after Moody's lowered its assessment of Egypt's sovereign debt by one notch to CAA1. Some of the securities at record low to around 50 cents on the dollar or below, before pairing losses. Meanwhile, the managing director of the International Monetary Fund has said that Egypt will bleed precious reserves unless it devalues its currency again. In a wide-ranging interview with Kristalina Georgieva, she also said that Zambia and Ghana, which have both defaulted on their debt, are making progress under their IMF programs, while Tunisia doesn't need a restructuring yet, but should act soon to shore up its economy. Now we're talking about debt. Kenya's president, Mr. William Ruto, will ask China for $1 billion loan to complete stalled road construction project when he travels to Beijing later this month. Ruto's plan, which also includes a request to lengthen the maturity periods of existing loans, marks a shift in his stance on Chinese debt after his coalition criticized his predecessor's borrowing spree from China during last year's election campaign. The Chinese loans, which stand at more than $8 billion, were used by former President Uhuru Kenyatta's government to construct infrastructure like roads. But many of these projects have since stalled after contractors left over unpaid bills. Africa was a focus of President Xi Jinping's ambitious Belt and Road Initiative launched in 2013 to recreate the Asian Silk Road and extend China's geopolitical and economic influence through a global infrastructure development push. But a surge in Chinese loans to countries like Kenya before a slowdown in Chinese lending from 2019 has angered critics, pushed up debt loans and subsequent repayment burden. The Kenya government is spending roughly half of its revenue to repay debts that are falling due. And now we come to Nigeria, where we now have a report of state fiscal transparency. We had that conversation earlier during Business Morning today, and we got a clip right now talking about what that is about and the responsibility of state governments as they manage state resources.
The state fiscal transparency is not even looking at the figures. It's just looking at, do you even put out this information for us to assess, for the public to assess, and not just budget? We are asking and we are coming out to say it is not there. There are several other investors, there are other people that want, development partners that want to come into your state that will go in there, see it, but they are not coming to you to say, oh, it's because I didn't find certain documents to give me an indication into what is happening in your state or what you are committing to health or education or agri, for me to have an idea to know if I can bring in my investments. They won't come back to you to say that. So it is even a plus that we go in there, we check and we can't find, and we are coming out with a report. Any of our reports is for public consumption. Any of our reports, we are reporting like we are reporting on behalf of the people to say we have gone into your website for this quarter and we can't find these documents there. We can't find these other documents there. And the whole idea is, can a state government, in this world that we live in right now, where tech is ruling the world, we cannot run away from it. Everything is powered by technology. The minimum that a state government can do is to commit a desk to managing our website, ensuring that our website is up to date. This morning while I was waiting before coming on board, I've been to some state government website this morning and they are down. It should not be told. I mean, we all run private businesses. We run, I mean, since I knew Channels TV, I've never have opportunity to go online to check Channels TV, and I didn't find Channels TV online. Why is it possible with a private investment and it's not possible with government. We need to do better.
Well, fiscal transparency seems like a good place to let it down now until next week when we head straight into the weekend. Thank you so much for being a part of 5 days of business conversations right here. We'll start off again next week. So thank you so much and enjoy the rest of your day. I'm Ini John Mekwa.